Hello investors and traders. Today I'll speak about the stock market, the indexes, and of course the economic condition in US. So let's start as usual with S&P 500. We can see that its level now is 38.76. So we saw a decreasement last week. Here generally anything has changed. I still see the S&P 500 lower. My target is here, the fifth way. So in my mind, of course, we trade in the decreasing channel. It's a diagonal here. It was the first wave, the second, the third, the fourth, and the fifth. So here the target is of the fifth wave is lower than the third wave. It's lower than 35.20. So here of course I expect to see S&P 500 at least 12% down from current level. We see that the interest rates are still very high in US, the inflation more than 6%, and of course it's very tough conditions for the stock market to grow right now. The Nasdaq, the IT companies index also generally speaking is the same. I'm not seeing any special performance in the future quarters, and of course I'm expecting to see this index a little bit lower. My target, I guess that it can be 10,000 in this way. The potential to see the index lower, my target is 18% lower. So generally speaking, now I'm not buying growth stocks, value stocks. I prefer to buy some dividend stocks like AT&T, Philip Morris, like WBA. Let's have a look on the Brent, on the oil price. So here it's 82, but look, if we'll check the Elliott waves, I think it was the first wave, the second, the third, the fourth, and the fifth. So now I'm expecting to see the fifth wave. Of course it higher than the third, so it can be much higher than 120 bucks for barrel. So in this case I'm very bullish on the oil price. I don't know what will be the reason, but anyway I think the probability here to see a spike in the oil price in my mind is very high. Let's have a look on some charts. So here we see the Transpacific container rates have plunged to the lowest level since 2018. Now it's we see really very low. We saw an increasement. Here it was the coronavirus. Its highest level about 20 kilo, but now I guess it's about 3, maybe 4 kilo per one container. It's FAO. It's the unit of 40-foot container unit. So generally speaking, if we see a decreasement in the fracht rate, so it can tell us that we might see a decreasement in the inflation, but the data we watching in the US data in the releases, we still not see we don't see the fast decreasement in inflation. But maybe this chart can signal to us that in the future quarters it may start. The next one, so the combined balance sheet of G7 countries, we see a decreasement. So if we don't see new money in the system, in the balance sheet of the company, so it's hard to the stock market, the equity markets to grow. So of course it's also another red flag for the stock market. And here we see the M2 money supply. We see a negative figure. It's data for last 80 years. So as previous the G7 countries, the USM2, all the money in the system, in the stock market, in the deposit, we see it's a negative. So we don't see any money in the system here. You see a spike. It was 26%. It was the Corona crisis. So we saw a nice. Nice improvement in this parameter, but now we see it's negative. So also I don't see any drivers for the stock market to grow right now. But if we look at the dividends, so we see that the global dividend rose more than 8% in the last year, and of course it's due to the oil price, to the energy sector, and of course the banks. And also we see expected that in this year the global dividends also expected to grow. So that's why, look, if we look for the last 14 years, we see of course a trend for growth. So that's of course one of the main reasons why now I'm heavily continue to buy dividend stocks. Let's move to the next one. It's the US dollar currency index. Now it's 104. My target is lower. I expected to see this index lower than 100. Now the peak of the interest rate, Fed fund rate, is now it's about 4.75%. Maybe it will be 5.5%, but then of course maybe towards the end of this year the Fed may start to even decrease its Fed fund rate, and then the US dollar will of course will become weaker and weaker. That's why I'm expecting to see it lower towards in the next years. And the TLT, the US Treasury bond ETF, one of my main positions for this year, my portfolio holdings. So look, TLT, my target is 120. Also accept the price appreciation, you can receive by the way a nice dividend. The dividend yield is more than 2%. So now I guess it's a very good time to buy the DLT, to hold the TLT US Treasury, and don't forget it's one of the most safest assets in the whole bond and the equity market. Also, if we look at the RSI, the momentum indicator on the monthly time frame, it's now 37, so it's already oversold. So it's also another signal and the reason why I'm buying this stock. So by the way, now we have here a major support level. It's 107. So we traded at the levels of 110, 109. So generally speaking, US bonds dividend yield more than 2%. I think it's quite safe. And now it's the future months, the future quarters may be very tough for the stock market, for the equity market. So now I prefer to allocate my capital to a bond market. And of course we have inverted yield curve. The 2-year yield, by the way, it decreased last trading day more than 5%, the 2-year and the 10-year, but still we have inverted yield curve, and it's another red flag, another signal that most probably we'll see, or we already saw recession in US, but the US yield for the 10-year is now 3.7%. And by the way, of course, inverted yield curve is a problem to grow for a stock market. But I can tell you, I can give you a hint, advice here. Look, when to buy the stocks, the S&P 500, the stock market, when it will stop to be an inverted yield. So when we may see a 10-year yield above the 2-year, so the long run yield will be higher than the 2-year than the short run. So in my mind it can be one of the best times to buy stocks. maybe I don't of course I don't know at which levels we may see the S&P 500 will be traded, but maybe 335, maybe 34. But anyway, maybe in 1 quarter, 2 quarters from now, it can be a very good point to buy stocks, to buy stocks ETF, to buy growth stocks, such nice companies like Google, Apple, Microsoft. But now I think it's very dangerous. Of course, one of the main reasons why I'm not can afford to myself heavily buying the US stocks, of course, it's the inflation and the interest rates hike by the Fed. So generally speaking, it was, in my view, on the stock markets. If you like this video, press the like button and don't forget to subscribe to my channel. Thank you for watching and see you on the next time. Bye.